Welcome, new breakdown. I took two little scalperinos on gold, two beautiful scalp trades, but let me break it down for you so you all can understand why did I took the trade, what's my thought process, and how I use liquidity as the main fuel for these trades. And the first thing that we have to understand is when we on the hourly 50 minutes, both are pretty much the same. What we can see is that we have an area of liquidity. We have an area of support with a pretty nice trend line, and overnight in the Asia range we have swept all that liquidity. Not only have we swept that liquidity, but also we have broken bearish market structure. This is key. We are currently in price discovery on gold. All-time highs are reached. So the moment we do a bearish break of structure, most traders think a retracement is in place, a retracement will come, and that's where we take advantage of those traders that think instead of use real data to understand what the market does, right? Most people think instead of do. All right, so jump it into the 50 minutes, and it was an hour prior to the opening of London, but it was pretty clean. And honestly, because it were scalp trades, 1 minute entries, 1 minute trades, we have to jump into lower time frames to understand these trades. And what did I see? Well, I started on the 5 minute time frame here, and what I saw is a nice little support area and two highs that created a resistance area. So what happened? We swept the support, but we also did what? A bearish break of structure over there. The bearish break of structure is enticing, inducing sellers to go short from where? Well, this area. And we can see that there is a reaction there, and I will show you on the 1 minute how clean as that reaction is. And this is where we buy when others press sell. Pretty easy, pretty simple, right? So, all right, going into the 1 minute, what do we see? Pretty clean. I see a bearish break of structure, a sweep. There was an earlier entry over here, but I wanted a bit more confirmation before entering on this. So I wanted price to tap into this area of supply, POI or the block, whatever, it's all the same, right? Then what happens? Price steps into that area, does a little bit of a pullback. I had this trend line drawn because I wanted that trend line to be swept. But I saw that price wanted to move higher. I entered over here, stop loss covered this wick over here. And what you can see is that we pushed up, came down, took out the trend line is swept. Every time the third touch of a trend line is where buyers come in. This is obviously where the liquidity is. And then it's just targeting opposite liquidity. Well, it was beautiful that we had this resistance area. So we came by, we passed by, I moved my stop loss under this wick, and price just started to fly. But where did it fly to? Well, obviously there is a 15-minute supply area over here, and I will make it a little bit smaller so we can have a better understanding. We have a 15-minute supply over here. Price steps into that supply. Take profit was hit because this is where the beginning of the supply is, where my take profit is, because it's very obvious that price wants to trade into those areas and then start the whole process again. So what we can see from price is that it's doing another inducement for sellers, right? What happened? We're stepping up, we have a low, we have a high. We're doing a bearish break of structure from a 50-minute supply. Remember, this is where sellers are getting heavily induced. What happens? We break structure, we tap into 1 minute supply over here. And what do? Another bearish break of structure. And this is what I love to see, because now we have bearish order flow on the 1 minute. We have bearish break of structures on the 1 minute, 2 to be exact. What happens? Price comes down, takes this resistance into support flip, sweeps it, right? So we sweep this liquidity. These are key factors for my entries. Liquidity has to be taken, right? Then what happens? We push all the way up. Again, this is where the early entry was from this order block or this little supply, whatever you want to name it. I will mark it out, this area. But I wanted a little bit more confirmation, so I waited for another push up, entered straight on the break over here, 1 minute entry. Price then was a bit of consolidating, coming down, coming up, but I already knew that price wanted to go higher. Well, what happens? We come into what? This area, starting to step down bearish again, right? Price comes up. The moment we take out this high, I'm de-risking my trade under these lows. So my stop loss moved to here. You can see on the 5 minute, this is a pretty clean area. Where did it go? Here. You can see under these lows, put my stop loss somewhere here. Price came a little bit down, then came up, moved my stop loss, and ever since price just rocketed off to my take profit. So both trades netted me 4%, which is pretty clean. And you can see that if you understand liquidity to a T. If you really understand what the market is doing and that it's all about traps, the market is one big trap, and it's not real traders creating those traps. No, it's algorithms that create the traps. We have market makers in this industry that are paid by the big institutions to create these kind of traps to pull people in, and not retail money. To be honest, retail money is nothing. It's a very small amount of traders in comparison to what the big institutions are doing. But you have to understand that big institutions trade support and resistance. Big institutions trade trend lines. Big institutions trade smart money concepts. And no, they're not trading themselves, but they have algorithms trained by high individuals, Harvard students, MIT, I don't know where they all come from, but smart minds. They program those algorithms to make these kind of traps. And if we can identify those traps, the only thing we have to do is understand liquidity to a T, and then we can use that to our advantage to take trades in the opposite direction. Look, this is what I mean by doing the exact opposite, right? This is where sellers come in. This is where sellers come in. Look what we're doing. We're buying every single time. And no, it's not a 100% win rate on this strategy. Absolutely not. And mainly it's used on EU and GU, but gold sometimes and some days give very, very clean entries on the 1 minute. In and out of the trades, 4% banked. Beautiful day. So yeah, this is a little breakdown for you guys. I hope that you can learn something from this video, and I'm happy to make more of these. So see you on to my next one. Cheers.